This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending March 5th, 2022. Our question this week is, what are commodities? The answer will be provided later in the video. This week, the market ended lower. The Dow Jones Industrial Average decreased minus 0.53% on Friday and was down minus 1.30% for the week. The S&P 500 decreased minus 0.79% on Friday and was down minus 1.27% for the week. The Nasdaq decreased minus 1.66% on Friday and was down minus 2.78% for the week. Looking at the week, we can see that there were 4 up finishes versus 11 down finishes for the major indexes. On Monday, the Dow Jones Industrial Average and the S&P 500 finished down, while the Nasdaq finished up. On Tuesday, all 3 major indexes finished down. On Wednesday, they finished up, and on Thursday and Friday, they all finished down again. The new unemployment claims were 215,000 versus 225,000 expected. Companies added 475,000 jobs in February. Total jobs rose by 678,000. Mortgage rates plunged to 3.9%. The national average gasoline price surged to $3.83. Wheat prices soared to the highest level since 2008. And energy ETFs hit multi-year highs. New unemployment claims, companies adding jobs, the total number of jobs rising, mortgage rates plunging, national gasoline prices surging, wheat prices soaring, and energy ETFs hitting multi-year highs are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What are commodities? Commodities are basic goods used in commerce that are interchangeable with other goods of the same type. A commodity is generally of the same quality and is fungible. For example, gold is gold, silver is silver, pork bellies are pork bellies, corn is corn, and so on. While there may be some small variations in quality, commodities that are traded must meet minimum specified standards. Commodities are often the raw materials that are processed in the production of other goods and services. Investors and traders buy and sell commodities daily in the commodities market. They can also buy futures and option contracts to trade commodities. There are also commodities ETFs like Invesco's PDBC ETF that can be bought and sold in the stock market. And you can invest in companies that produce or use commodities like oil companies, for example. Do you invest or trade commodities ETFs? Do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. However, you are going to have to teach yourself if you ever want to learn how to get wealth and income through the stock market. You must RSI, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be a critical thinker and investor. and they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can borrow from the library or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at SouthsideSchoolOfFinancialFreedom.com. Here is my trading watch list for the week ending March 5th, 2022. I trade at least two of them on the list this week. The strongest performer on the list this week was Invesco Optimum Yield Diversified Commodity Strategy number K1 ETF. That was a mouthful. Ticker symbol PDBC. It's in the first column. It increased 15.54% for the week and was up 4.2% on Friday. PDBC is an actively managed exchange-traded fund that seeks to achieve its investment objective by investing in a combination of financial instruments that are economically linked to the world's most heavily traded commodities. Looking at a summary of results, you can see that PDBC has increased 30.58% year to date. I did not generate cash from PDBC this week, but I will in the future. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio is not outperforming the S&P 500 index ETF SPY so far in 2022. The Southside portfolio is down minus 21.85% versus minus 9.01% for SPY, a difference of 12.84%. The Southside is losing to SPY by almost 13%. The primary reason the portfolio is losing is that the Southside is heavily invested in Bitcoin, and Bitcoin continues to be in a bear market. Will it bounce back in 2022? Stay tuned to find out what happens to Bitcoin and subsequently what happens to the Southside portfolio, because we will remain heavily invested in Bitcoin. The portfolio is 84.3% in a Bitcoin trust. Equities, including puts, calls, and ETFs, make up 15.6% of the portfolio. Cash is almost nothing, 0.1%. The cash flow generated for this week was 0.4% of the portfolio account value. The account value changed by minus 4.61%. Meanwhile, the S&P 500 ETF SPY changed by minus 1.27%. ISO option contracts on one position this week. They were calls that range from $0.00 to $298.74. You can get more details, including the total dollar amount of cash flow for the week on the website, SouthsideSchoolOfFinancialFreedom.com. Check out past videos for other questions of the week. They are listed in the description section. Please like, share, and subscribe.